Markets reward discipline over time, but it punishes emotion immediately. That's how I see about investing. Before 21G became a firm, it became a way of thinking, way of life, how you see risk, fear, and emotions and long term decisions based on that, because everything revolves around that. So let's start our journey of 21G. In 2007, I went to US for masters in computer science. I studied computer science from San Diego State University, California. In computer science, we learn about algorithms, how to develop logics, problem solving, analytical skills, and what to do in terms of uncertainty. So these basic things were getting founded while I was in computer science. But then I got to know stock market and I had passion for numbers. I love numbers. That's something I love from childhood. Let's look it up. So then I started reading books of stock market. That's something intrigued me. I said, oh, all these things, I had like a liking of it. And so that's something I should really pursue it. So that was a journey in the beginning. And that's how I developed the skill and I started investing in stock market from 2007 end, and good times, bad times will go over. And that's how the beginning started for 21G. So that curiosity and learning phase began back then. And at the end of that phase, by 2016, I had seen 1-2 year of good times and 3-4 years of bad time. Slowly lose and learn a lot, because there is not much to learn in good times, and bad times every lesson teaches you a lot that becomes part of our principle what we are today. So that's the combination of three we learned from 2016, and then we'll go to the journey here. By 2016, I had made up my mind, so I want to do this moving back to India. So we registered for 21G proprietorship. Then in 2018, I took the big step and I decided to come back to India, because if I could give 2-3 hours every day and get better in that, and if I do it full time, and then it could reach new heights, and that's where I decided to come back to India. And so we named it 21G. 21 is basically a part of a number taken from Elliott wave theory, and in that 21 is the number of pinnacle. So there are waves that's there, and if any bull market or bear market reaches 21, so it shows the end and the big reversal happens there. So the 21 number is derived from there, and G is for growth with the discipline, not just speculation. That's a name we derived it. In 2018, after moving back to India, one of the issues we were facing was because we were technically good, but sales and marketing is a different ball game. So then we found something called Smallcase, and it's like dream coming true. It's like you're good at something technically, and you just have to start your learning curve of learning everything, managing clients, everything, visibility, getting Smallcase, finding that out, and realized something that our life could change. So we collaborated with them, and then we realized we can just focus on what we are really good at, and they took over all our work. So no stress, nothing. So then we could get better in what we are, and I believe where we are today, we could not reach if Smallcase wasn't there, because if you don't get best in what you are doing, you don't reach new heights, and Smallcase made sure we focus on what we are. So that really changed. So then we incorporated the private limited company in 21. Then in 2022 we got non-individual license from SEBI. Now we are going to focus on our core philosophy, and so the first step of our philosophy is avoiding big losses. So when I moved back to India, there was a phase where markets corrected 10-15% in a span of 30-40 days, and it was a big big jolt for us. So then we realized that what we learned, there is something of protecting our capital that could really help long way, because it's very difficult for anyone to gallop 15-20% down portfolio in a short span of time. It can still happen, but if we make it better, we started focusing on risk management part. One of our main focus in our company is protecting our capital, like in downside, that's one. And second part, because decisions, follow the predefined work, and market try to get you in by news flow movement, and we have a framework, we just follow that, and it should not be easy to change things, because as we discussed in first slide, the emotional part is really right. So if you have a predefined process, then you could do it much better. That's the number two one. And third part, risk management, and how risk management is a little different. So bad times help us protect capital, but let's say we did well, let's say 6 months, and we are not decisive where the market is going, so we tend to get little more aggressive, because if you are doing well, you should get little more aggressive, and market surprises everyone on upside and downside. So we believe because of that, we tend to hold our stocks a little more longer and trying to get the last bit of the way. So that's part of that, because you can afford to, and you should too, because you're doing well. Having little more table on the risk always adds value. So that's the third principle we follow. And the last one that we really tried working on is understanding market cycle, because markets normally move in cycles, like a bull phase, bear phase, consolidation phase, and we worked on understanding these cycles more, so we could enter in the beginning of cycle and just exit when the cycles are ending. So it's a probabilistic model. These are basically the 4 principles we use for investing. So next is basically stock selection, and which aligns with the investor. The first step was not to have seen big downside, which even I can't, because if everything is invested in that, so we understand that one of the factors with the clients too. So we created rule-based selection process, so it should not be easy for us to get into a stock or get out easily, and so it avoided whipsaws. So that's the first step. Second part of selection is selecting companies where there is good leadership and good track record, and then there is a structured allocation of that. And the last one we use is there is no difference of marketing or execution, because most of our portfolio is aligned with client, and we are always watching that and tracking if anything changed. So that really helped us understanding client needs. So these 4-step process help us get easily in stocks, but some things are changing. Like if you understand silver, the correction, those things used to happen in 6 months, but now it happens in a matter of 24 hours or 48 hours. So every iteration is getting faster. So even if you understand them, the reaction time reduces. So we are adapting to the new changes and trying to adapt to that and get our portfolios and strategies updated accordingly. That's the part of stock selection, and which really aligns with our investor, and we wanted to bring it up. So the next part of slide is investing with discipline, and what we learned in investing, one is the technical part. You understand chart and stock selection. We believe there is another important part as stock selection is the investor psychology, because many of the times when the markets are doing really well or bad, the psychology part takes control of our mind and it doesn't let us do what is right. So we believe that part needs to be focused, and because it's like fitness, it doesn't get fine in one day. It's a long-term game, but one day of aggressiveness can lead to injury and take us back for 3-4 months. So being disciplined and not letting emotions come is a mastery that really helps in this field, because same in our case, avoiding big losses, it helps us to achieve a long-term growth, because when things go bad, it gets very difficult to do what is right. So we take preemptive measures that there is no big drawdown, and CAGR really helps, and we understood it's better to grow slowly than having a low CAGR, and that also turns out to be a much better CAGR overall. So that strategy really works well. So that's one of the factors we wanted to bring, because stock selection is one part, psychology is another, that, and we believe they are equally important. So the next part is who 21G is built for. It's for people who value process, that achieving long-term goals can be achieved with a process, with avoiding short-term volatility and sticking to that process, and most importantly, and understand the volatility is part of the game. if we can't handle that, I think it's difficult to be in the game till the end of the cycle or big money in market. So that's one thing we expect our clients to understand, that it really helps to be not affected by short-term movement. Protecting our portfolio is number goal, and we are continuously working on that. So the next 5 to 10 vision is basically that we continue improving our strategies and by reducing risk, and that's one of the things. And one of the things we want to really focus on from here on is build long-term relationships with our client. We believe that staying in touch with our investors, developing relationship really goes long way, and without compromising our principles, which help us stay ahead in the game. Even though we have to, it affects short term, we continue to follow that and achieve our goal. Last one, before we end, we believe there is no shortcut in fitness. The same goes with investing. It's a long-term game, and you just have to learn to survive in that, because there are very few winners who survive 10-20 years of bull market. So we believe it's same for us. So if we survive and hold on to our game, we can do really well for long term. So if you believe that matches with your psychology, we welcome you to 21G Investments. Thank you guys. Thank you everyone for joining us.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BSE and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors.